the whole idea for this session is that we would be discussing the most common VAT questions which you guys would be having. Normally, we used to run the training sessions, and we have found out that as it has been over 3 years now, so most of you already having a fair idea about VAT and its implications. But the issue where it happens is that once you have a specific scenario which you may not be able to find an appropriate answer on your own, and which you may be requiring a helping hand of a tax consultant. My name is Mirza Farooq. I'm basically a lead consultant here at Lynchpin Consulting. And what we do is that we basically advise the clients on complex VAT issues here. So please, in case if you have any query, you can send me in chat, or please you may raise your hand or unmute yourself on your own and you can ask me specifically. So the floor is open to you guys now. Whosoever wish to ask me specifically, please go ahead, unmute yourself and ask me.
After the new amendments which came for the sale of services, like export of services, where if client's presence is there in UAE, then we have to charge a VAT of 5%.
Yeah.
Now, in a particular case, there is one person who owes a business in UAE and same person owes a business in USA. And he is providing services from his UAE business to his US business. Mm-hmm. So whether it will be considered as a 5% VAT or 0%.
Okay. The subject which you have mentioned earlier will not have a reference in this scenario. That subject which you have mentioned, that if the client has a presence here, understand that the owner and the company are two separate entities. Okay, there cannot be a linking between owner and a company to establish a taxability unless until they are part of a same tax group, and we have to form a group. In that case, we see the ownership. So in this case, I am assuming that UAE is having a separate company owned by Mr. A, and the same Mr. A is owning another entity in USA. Am I right here?
Yes, exactly.
Okay. And these two companies are not actually branches of each other. But like someone is not a branch of another company.
Right.
Okay, so in this case, these two are distinct entities, and if you are giving services, normally it would be zero rated. You will not be charging any VAT on this.
Okay, thanks.
Okay, you're welcome. Next, anything anybody else would wish to ask? I think we have Ashma, Irene, Christine. You may unmute yourself and you may ask the query accordingly, please.
Hi Mirza, Christine
Yes,
here.
Christine.
Good afternoon.
Yes,
Thanks for this opportunity again.
Afternoon.
My question is just as based on your experience with your clients, would you have any lessons learned from VAT audits by the FTA that you would wish to share with us?
Yeah, basically the first and foremost lesson what we have understood is that you get only 5 days as soon as you get a notification for audit. So you don't have enough time to make reconciliation and gather the record at that time. So the best practice is that as and when you file a return, have your whole record available. Ideally, if you're a small company, have those invoices scanned and available in the same folder, or if you are having any ERP, at least have a complete VAT reconciliation file available with you. Because normally at present audits are happening only for the entities who are applying for a refund. Okay, unless until FTA found that yes, audit has to be done. At present, we haven't seen that FT has started audit on its own, but I am, I'm hoping that very soon it would be started. So just to give you answer of your specific query, that once we apply, you know, let's say a refund, uh, normally FTA will take some time to accept it, and then once you get email from FTA, they will be sending you or giving you a link to fill out an Excel sheet. That Excel sheet normally will have your top 10 invoices of your input and output, your import details, and it would be for a specific period. So for example, FTA will they may take single period, or they may take the multiples also. So they will send you that within 5 days. You send them information along with scanned copies of your invoices. If they ask all invoices, it would be all invoices. Otherwise, they may ask you that please send us the complete sheet, and they can do a sampling also. So once you send them, they would have certain queries, and after having the queries, uh, you will answer them. So at present, it is like completely online audit. Few things which FTA will specifically is very very particular is that insurance of your staff family members. That's one thing. If if you are in Dubai, as we have an idea that we cannot claim the insurance input VAT if we are giving insurance to the family of the staff members. Next is the hotel accommodation of your suppliers and contractors or clients. This is also cannot be claimed. Next is if you're giving any free goods. Okay, so up till now we have seen that FT has not gone down into so much detail about transaction structure, but yes, expense claim is an area which has to be focused on. And ideally, if you guys are also filing a return, be careful that if you are in doubt, either take a clarification from a tax consultant or from FTA, or if the amount is small and you are still having a doubt, it's better to avoid that thing. I hope it gives you a fair idea.
Yeah, thank you. Can I make a follow-up question?
Sure, please.
Regarding the hotel accommodations, I believe it's part of the one of the clarifications.
Entertainment
For
expenses it
entertainment.
is.
Yeah, it mentioned there that if it's for the employees, if it's required for business, like for example, also if you have a new joiner, and for a short period of time you need to provide accommodation, that should be
Yes,
recoverable, right?
you can.
And yeah.
Yes.
And for consultants, what if we have external consultants and mostly they are they are non-residents here? So once they're in UAE, we provide for a few days accommodation in the hotel, which is normal, not not an expensive hotel, just a normal hotel. So that would be recoverable, right? In light of this.
No, you cannot claim that. You cannot claim that because
For
we had
consultants?
experience. Yeah, we had an experience with a client which was in oil and gas, and the client, before we joined the client has already claimed the input VAT, and when the audit happens, FTA said that you cannot claim the input VAT for a consultant who is coming to serve you here in UAE from outside. So on hotel accommodation, the VAT was it wasn't allowed by FTA to have that claim.
Oh, okay. Even if it's for the business purpose. But if for the employees, then that should be claimable.
Yeah, basically, if you see entertainment expense clause in which it says that you cannot claim the entertainment expenses, it is specifically saying other than employees. Okay, because employees one is covered under the free goods to the employee section. So in this case, it is your suppliers and clients, primarily.
Okay.
Is it okay?
Yeah, because for this entity, it's they somehow treat the consultants as like employees, so because they're working on behalf.
Yeah,
But thanks for this clarification. Yes.
you may treat them as an employee for your accounting purpose, but employee can only happen once you have employer-employee relationship, and the base is that he cannot work anywhere else without your consent.
Thanks
So,
for this clarification.
You are welcome. You are welcome, Christine.
Hi, this is Sajeev. Can I ask you one question?
Sure,
Regarding
Sajid.
the insurance, you said in Dubai for the, only for the workers or employees only it can be claimed. Right?
Yeah.
So, but few of the employees' relatives or wife or somebody, they have taken insurance. So, suppose we are receiving an invoice, combined invoice, can we claim on that only for the employees, or we should get separately two invoices? We should ask them to get.
Yeah, it is a very practical scenario because normally once you are signing up for the group employee insurance and it has the dependents, insurance companies normally do not give you separate. So it's better to ask your insurance company to split it up. That is the ideal situation. Otherwise, you need to make a justified clarification and split it up. But that is, of course, would be subjective calculation. So ideally you should get it from insurance company, a breakup of dependent and employees separately.
But for Abu Dhabi, it is okay for the dependent also, correct?
Yeah,
As per
yes, Abu Dhabi, we have the option to claim for two children and
spouse.
one spouse, I think, if I'm not
Yeah,
mistaken. Yes, as per the legal requirement as we have in Abu Dhabi.
I have. Can I ask you one more question?
Sure, please free to ask.
Like we have some managers in the head office. For their salaries, we are getting the invoice from for Europe. So those
Sorry,
invoice,
sorry.
some of our managers in the head office, Europe from Europe. So their salary invoice and all, which are we are getting, and from Europe, and then we are paying that also to that European company, whereas we are back charging these salaries to the head office. That time we are making an invoice with VAT. Is it? It is correct for the payroll.
If you can just give me an idea, where is your head office?
Okay, our one of our director, he is working in head office. It is in Dubai only.
Okay.
Group GCC or head office. So
Okay.
this some of the one or two directors' salaries are routing through our company. So
Okay.
the Paris or Europe in Belgium or company, they are invoicing us, and
Okay.
then we are paying to the Belgium company, our parent company. So what is happening? This salary actually we are booking only for payment purpose, but we are back charging to the head office. That time we are making an invoice, and that we are charging VAT also, and we are booking that in their account, and they are paying us. Whereas the invoice from Europe, it is without VAT. So we are booking that invoice with a reverse VAT. This is the correct procedure, or?
Yes. First one is absolutely fine. You have to record under RCM. Second one, please, if you can just give me an idea. When you say head office, it's not a branch and the head office. Are you guys
Not
acting as a
actually as
branch?
a separate entity
Separate
only,
entity.
because the
Okay.
trade license, everything is separate. But the group company, it is the directors are
Yeah.
controlling all.
The better situation, the better treatment is that it's better that you charge VAT on such
Yes.
salary charging also. It would be advisable.
Okay. Thank
Okay.
you.
You're welcome. You're welcome. Yes, sir.
Hi. Can I ask one question?
Sure, Rajiv, please ask.
Yeah, we are invoicing some customers, and actually, due to some disputes, this invoice they will not book. And after maybe after 5 months or 6 months, they will come to us and asking for changing the dates to current date. Sometimes we were forced to do this manually because the system is not allowed to modify the date. So is this a correct procedure, or it's against that rule?
No, it's not the correct procedure. You should not do like this, because FT has also given a clarification that invoice date to claim input VAT is not the only condition. Okay. Invoice date is important for supplier to record its output VAT ability. For client, for example, if he is having a dispute, he needs to fulfill two conditions. those conditions, the first condition to claim input VAT is that he should have received his tax invoice from the supplier. That's one thing. Second is that he must have intention to pay that invoice within next 6 months from the within 6 months of due date. These two are the conditions. In the period in which these two conditions are fulfilled, he can claim his input VAT irrespective of invoice date. So I'll give you a practical scenario. In your case, for example, you issued invoice in Q1, and that in Q1 you declared it in your output VAT also, and you have paid the tax. It was supposed to be paid in Q2. In Q2, client came up and had a dispute with you, and the dispute was ultimately finalized in Q3. Amount remains same, and the client, okay, to whom you have issued the invoice, he can claim this invoice in Q3 because his second condition is fulfilled in Q3 only. And FT has gone to the extent, has given the option that either you claim in that period in which these two conditions are fulfilled, or in subsequent period also. So in this example, he can claim it in Q3 also and Q4 also. So I would suggest that do not change the date of invoice ever if you have issued an invoice. The only way which you can change the invoice particulars is always via a credit note. So in this case, either you just cancel that you just issue a credit note for for that invoice, and then issue a fresh invoice, which of course is not a recommended solution, because you will have so many credit notes without any reason for that. So it is having a clarification available on FTA site also. You can discuss with your client that you do not have to worry about invoice date. Even if you have a backdated invoices, if our dispute is being settled, you can claim in that period or in subsequent one. I hope it is clear.
How they can make a remark on that the dispute is settled?
You must be having some sort of email communication. Am I right?
Yeah.
Yeah. So that email would be sufficient for that appropriately.
Okay. So the changing date is not advisable.
No, changing date is not advisable at all. Do not do this practice that you have. See how you will do this. For example, you have invoice of Q1, and the same invoice you change the date in Q4. How you will show it in your, you can say, the tax return? You have already paid that tax, huh?
No, we have paid it.
So why you will issue the same invoice with a different number or different date in Q4 again?
The number we are not changing, only the date. They want, if you want payment, then you need to change the date to correct.
Yeah, I know that it is a hard thing as far as the practical side of it is concerned. It is definitely something which it is something which you guys face it practically also, but from the angle of tax consultancy and from the angle of tax compliance, ideally you should not be doing this. Is it okay?
Yes, thank you.
Hi, can I ask one query? Hello?
Yeah, are you able to hear me?
Yeah. One more doubt I have. When Dubai companies make a sale of services to KSA company,
Yeah.
which is registered in KSA, earlier it was like it is a out of scope transaction, but now whether we need to show it in 0% or it is out of scope.
It was never an out of scope transaction. It was always a zero rated transaction.
Zero. And if there is any out of scope transaction, there is no place to show it in the return.
Yeah.
So is it okay our sales doesn't match with the VAT return because of the out of sale transactions?
Yeah, you are right, and you will make a VAT reconciliation in in this case.
Okay.
Yeah.
Okay, thank you.
You're welcome.
Mirza, Christine here again.
Yes, Christine.
Yeah, just as a follow-up on the insurance cost. So we get it right that there's a distinction between the claiming it if you're an entity based in Abu Dhabi and Dubai. So what if in this case the insurance is actually a part of a worldwide of a group insurance in which it is centrally billed to the head office. So the head office in Switzerland recharges the appropriate portion to the UAE entities. So for Dubai, this typically includes the cost of the dependents, but I do get your point that of course it's the best practice to get the segregation between the employee and the dependents cost. But this is currently not available for some reasons that the head office cannot provide this information. So given that this invoice is coming from the head office outside the GCC, normally this is treated as under reverse charge.
Yeah.
So is there still is it still okay to include the cost of the dependents, because first it's not clearly identifiable, and then if it's RCM it will just offset itself, so there's zero VAT consequence.
RCM offset is only allowed to the extent to which you can claim your input VAT. It's not automatic that it is always equal. So your output VAT would be on total, but input VAT RCM is only on the amount on which you can claim your input VAT. So that's how it will become your expense in this case also.
Yeah, but even so, the net effect would be zero, right?
It will not be zero, Christine. See, understand. For example, if I get 100 as my total insurance, out of which, let's make clear, I get 100,000 and 5,000 as an output VAT RCM. Out of this, I can only claim insurance up to 60,000 only. So 60K would be shown in my RCM input, and the input VAT of 3,000 only would be claimed in this case. So my output RCM would be 5,000. My input RCM would be 3,000. So I would pay ultimately a difference of 2,000. So it's not always automatic that you will claim always input VAT equal to RCM of output VAT.
Yeah, but
if
it's the case that the dependence portion is not given, and it's quite difficult to obtain it even from the insurance company because they don't do such.
Okay, see, in this case, I would definitely say that you can at least make a calculated guess here that, okay, if I'm having 80 people, out of which 40 are dependents, 40 are staff, let's make at least claim of half. I'm just saying it's, it's not official by FTA, it's not specified here, but something has to be done.
Allocation.
Yeah. Okay.
But in the output portion, is it also possible to just equate it as the portion applicable for the employees only?
It is a guess. As I said again, you may not take FTA. They may or may not agree with that. So it's purely up to you how you will be doing it.
Okay.
Okay.
Thanks.
Thank you. Okay, I have a query in my chat box where let me just answer it first. So let me go back to that. It is from Pri. It is saying, thank you very much for the session. Thank you, Pri. I would like to know more about intra-GCC VAT treatment and implementing state in UAE, KSA, Bahrain, formally recognized as implementing states. If so, how the VAT treatment for transaction between each of these countries, is it uniform? Okay, the good news is it's pretty simple. At present, there is no concept of implementing states at all. Okay, so any transaction which you will do between UAE and any other state which has VAT already in place, for example, Saudi and Bahrain, so you will treat them as if you are dealing with any other country. So it would most likely be export of services or the goods. Now, why is it so? I'll give you a reason also, and I'll explain you when it will change its status. Let's take our principal VAT country here as Saudi. So Saudi has a requirement in its VAT law that they will consider implementing state to any other GCC state only upon when there will be a centralized VAT system of GCC, which will be connected via electronic exchange medium. So up till then, they will not be considering anybody as implementing state. So at present, we do not have any. So Saudi does not consider anybody as implementing state till that time. Bahrain also follows the same, similar, exactly same wording in Bahraini tax regulations. UAE says, if somebody will not consider us as implementing state, we will not consider that state as implementing state. So in nutshell, at present, there is no concept of implementing state. So you can simply treat it. Yes, when this implementing state will be applicable, there will be a significant change. Those change, of course, are at present also available in your tax regulations, but your format of tax return will also change. Your taxability will also change between intra GCC transactions. So at present, simple answer is you do not have any concept of implementing states. Is it okay, Pri? I hope you got your query answered.
Hello, Mr. Mirza. Thank you for that.
Yes, Pri.
Yeah, on the same note, I would like to ask, because I, for example, have a supplier in Bahrain who insists that he wants to charge me VAT. The services
He's supplying
were
you
delivered,
what? He's supplying,
supplying me services in Bahrain.
okay.
He's
Which
registered in
services?
Bahrain. Basically, he does inspection services for me.
Inspection
Surveys.
for?
It
need to
was
ask this question
trade
because
inspection.
I cannot.
Sure,
Sorry?
sure. Trade inspections. Trade
inspections.
Yeah, yeah.
He will
So
charge you
he's
VAT on that.
yes. So how is that applicable?
Yeah, it is applicable because it is a service which is applied for some goods. It is a service on some physical item there. Okay.
Yes.
So the rule is that the place of supply of services which are in connection with some physical goods is where those goods are situated. So its place of supply is basically Bahrain, and he will charge you. And unfortunately, if you are here in UAE, you cannot claim that input VAT, and it becomes your expense.
Right. So this is only for the, I mean, as in the place of supply concept, is it specific only to Bahrain or is it to any country?
No, in Dubai also it is same. Like
right.
in UAE also it is same. So in all these three countries, they are very similar. That place of supply will trigger your tax, charging. So if you are giving services which are just services, for example, you are taking some HR consultancy, okay? In that case, he should not charge you VAT. It would be zero rated. But if he's giving services in relation to some goods, installation, inspections, cleaning, all those things, those would be chargeable in that country itself.
Right. So the same applicability, even if it were, let's say, in Saudi Arabia, if he were to provide me services on physical goods in his location where he is registered, it would be applicable for me, the VAT applicability.
Exactly. You are right. You are right.
All right.
Okay.
Thank you, Mr. Mirza.
Thank you very much. Okay. I have another inbox. Let me just answer it. It is from Mr. Paul, which is saying that how come VAT in Dubai and Abu Dhabi is different for health insurance? VAT law is UAE and not by Emirates. Exactly, Paul. It's not VAT laws, differentiation. The differentiation is in Dubai, it is not a legal obligation to provide health insurance to the dependents. In Abu Dhabi, it is a legal obligation. So VAT law says you can claim input VAT on free goods or services to the employees if it is a legal obligation on you. So that's why, to make it simple, we are saying that you can claim in Abu Dhabi, but underlying fact is that in Abu Dhabi it is a legal obligation. So we are claiming the input VAT. If tomorrow it becomes in Dubai also a legal obligation to give health insurance to the family, then we can claim it in Dubai also. I hope it is clear to you, Paul.
Yeah, thank you very much for answering that. Just clarification. So this is to do with the labor law of Abu Dhabi and Dubai, which is different.
Yes,
right?
exactly.
Okay.
You're right.
Okay, great. Thank you, man.
You're welcome. You're welcome. Okay. Who is next with us?
Can I ask you?
Yes, Ajif. Please.
Yeah. What about when we are writing of bad debts? Can we claim the that claim refund or something? What is the procedure?
Yeah, as soon as you will be putting somebody as a bad debt, first of all, 4 conditions need to be fulfilled. First one, supply has been already been completed and you have charged and paid the VAT to FTA. Second one is that it is you are treating it as a bad debt in your accounting system also. Third thing is that 6 months have been passed from the date of supply. Fourth is that you should have submitted a notification to your client that you are declaring him as a bad debt. Once these 4 conditions are fulfilled, then you can take the VAT amount on that transaction and put it in adjustment column of your box number 1 of VAT filing return. Okay, so automatically it will be subtracted from your output VAT.
Okay, all the 3 conditions, first 3 conditions are okay, but what about the 4th condition? What is the type of notification? Suppose this client is run away.
Yeah.
And what,
right.
how we can?
So I will try and say that I would send a registered, let's say a mail to his official address, which of course would definitely, coming back to you, it's fine. But
Email will be okay. Suppose it is a live client, email can be considered.
I was coming to that. Email apparently is because FT has not specified any form of the communication. As in Saudi, you require auditor certification in this case, but here it is not a requirement, so you can do it.
The 6 months past is after the supply or after the invoice, not after the writing on.
No. Date of supply.
Date of supply.
Okay.
Thank you.
You're welcome. Okay, I've got inbox query. Please let me answer it first. It's from Sagar. He's saying, continuation of services. I believe it's in continuation of services provided to Saudi and Bahrain services related to IT consultancy, whether place of supply will be Saudi or UAE. It requires much more understanding the type of IT services, because electronic services have very specific place of supply. So either you can send me in query here, or you may ask me afterwards, so I would be able to answer you that what sort of actually these services are given. Either they form part of electronic services, or they are simply IT, IT consulting services. Only then I'll be able to answer it. Yes, Mr. Hafiz, please.
Yeah, just want to share my understanding. Thank you for giving me opportunity. This regarding Abu Dhabi and Dubai family insurance to be recovered, the VAT to be recovered or not. My understanding is in Dubai as well, if your contract, giving you right to give the insurance to the family, because some project-based employees, this is the responsibility of the company to give them their family as well the medical insurance. So this all is a two-way, either the government legislation giving you some, cover, or your own company has a mandatory to some project-based employees. So there are some, legitimate, context side should be seen while recovering the input.
I will answer you that. The clause where it says that you can claim input VAT on free goods or services supplied to the staff if it is a contractual obligation and it helps the employee to perform its duties, and it helps the employee to perform its duties, which means without this, employee cannot do his job. So family insurance surely will not fall under this category, because even if you do not give health insurance to the employee's family, it would still be, they can still continue their job. I will give you an example on which you can give free goods to the employees, but can claim the input VAT. The example is, for example, I have a sales guy and I have given him a cell phone. So yes, I have given him free because sales guys are outside. They cannot do their duty without having a company cell phone. But family insurance does not fall under this, and FTA has issued a full clarification on this available on FTA site. Even if it is a contractual obligation, you cannot claim the input VAT unless until it is a legal obligation. I hope it is clear, Mr. Hafiz. Okay, sir. Who's next with us?
Hello.
Yes, Mr. Sagar.
Yeah, I had a query regarding the reconsideration. We have been charged a penalty by FTA.
Can you speak a bit louder? I can't hear you properly.
Yeah, I had a query regarding reconsideration. We were charged a penalty by FTA, which was not accepted to us. So we have filed a reconsideration request, but already 1 year has passed since that request was made, and there is no response from that. So is there any chance that we can reapproach them or request them to solve this?
Sure. The first thing here is that after imposition of the fine, how long you took to file a reconsideration? How many days?
Within 2 to 3 days.
In 2 to 3 days. Okay, it's fine. If it was within 3 days, then yes, you have all right to basically come to FTA and send them email and all those things. Only if you have filed it after 20 business days, in that case, you cannot have any favorable decision from FTA. But in any case, whether it is a favorable or unfavorable decision, FTA would definitely come back to you. And if it has been a year, I'm sure it is a skip case, so you have to ask FTA again and again, or probably contact them via social media also. They will definitely reply you.
Because FTA has been following us for payment of the same penalty, which was not accepted by us.
No, FTA, if they are following up for the payment, it means they must have given a decision on that also. Have you checked your email, the authorized email?
Yeah.
You will reply via email only.
Okay, so should we follow up on that reply which they have sent to reconsideration?
They must have sent you a decision if they are following up for the payment. Then you need to check your email, please. The FTA will follow up only once there is a decision for that. So when you check online, the decision, like the status is what? Is it showing as a pending reconsideration?
No, online we cannot check the status of reconsideration.
It is a form only.
Yes.
Yeah, you need to write it to FTA. But I'm sure if they are chasing you about the about the payment, then the decision has already been with you. And please check your spam folders or email again.
Okay.
Okay, sir.
Will do. Yeah. Thank you.
Okay, so I have got from Sagar again that it is Click license and SAP related consultancy. Again, it is apparently if you are just giving a consultancy from here, then it would be an export. But if it is a software which you are supplying and it will be accessed from outside the country and it is online, then it would be out of scope transaction, because place of supply for these electronic services is from where these services are being accessed. So this area, I must say, would require further scrutiny of the documents, services, as well as the whole contract. Okay, sir. Who is next with us? Irene?
Yes, hello. We just opened an office in Dubai, and then can I claim the expenses from there? Because until now, the registration for the VAT is still ongoing. That every now and then they rejected it. They're asking a lot of documents. So can I file all the expenses for Abu Dhabi?
Yeah, how it works is that if you have any expenses on which you have been charged VAT, but it is prior to the registration for services, once you get a registration, you can claim as old as for last 5 years VAT on services. And for goods, you can claim the VAT which you have purchased prior to the registration. And if the goods are still in your own possession, you can claim the input VAT on those goods also, but it can only be claimed in your first VAT return.
Okay, thank you.
Okay, Irene? You are welcome.
Yes, thank you.
You're welcome. Okay. Who's next with us, sir? Let me check. I have some inbox queries also. Most of those have been answered. So please, if there is any other query which is still unanswered or you wish to ask anything, please feel free to ask. You can unmute yourself and ask the question.
So regarding the click license and SAP, which I wrote in, we are giving the services where we will install the click license and then the monthly AMC also with related to that. And most of our consultants are doing the job from either India or other countries. Like we don't have anyone sitting in UAE. So,
no, but you are invoicing from here?
Yeah, we are invoicing from
so
here.
It is a service which you are giving from here to Saudi, am I right?
Yeah, right.
And you are giving some software consultancy?
Yes.
Okay. Apparently, software consultancy, if you are giving from here, it would be 0 rated. But if you are supplying any software to anyone, which is accessed in those countries itself, and so in that case, for you it would be an out of scope service, because place of supply for electronic services which are accessed outside the country is basically place of supply is in that country itself. So in that country, those guys would be recording it under their own RCM because they are having a tax registration. I'm just assuming that your client will have a tax registration in Saudi. So for you, the place of supply, if you are supplying a software which will be accessed in Saudi, would be Saudi. And because your client is having a TRN, like TIN in Saudi, so they would be recording it under RCM. You will not be charging anything on that.
Okay.
Clear?
Yeah. Thank you.
Okay. Yes, Mr. Hafiz.
My question is regarding the platform business. You know, people are going towards the e-commerce and the platform for trading purpose. If it is doing from the Dubai, so which article will be covered? And if it is registered in the outside UK and doing business in UAE, so what will be the treatment? In both cases, please highlight something.
Sure. You mean that it's like Amazon, am I right?
Yeah. Yes, bilkul. You are right.
Okay. If it is Amazon, then understand on Amazon, supplier is offering its product and the client is buying from the supplier through Amazon. Okay. So in this case, please elaborate. You are asking the treatment from the angle of Amazon or from the angle of seller on Amazon?
It should suppose both ways. Sometimes seller to direct consumer and sometimes through Amazon to buyer.
Okay. When you are the one who is selling via Amazon, charging VAT is your responsibility. Okay. And how it works is that all prices, what you put on a marketplace must be including of VAT. Okay. Because you do not charge it separately. And tax invoicing also would be your own responsibility in this case, or Normally, if it is self-billing, which I'm not sure about Amazon, but there are so many entities which do the billing on behalf of the supplier. So it will basically, it's like I am issuing invoice on your behalf to the client, including VAT, and I can give you statement that okay, you have sold on my platform 100 pieces. Here is a statement plus the VAT amount. So it is as good as that you have issued the invoice. Okay, from the Amazon angle or from the angle of a marketplace, when they will supply you some service, they will be charging you 5% VAT on their shipment fee or fulfillment, order fulfillment fee or any such thing. I hope it is clear.
Okay, okay. Thank you.
You're welcome. Okay, I have an inbox query. Sir, we have a company in free zone and our previous filings were all credit balance. Very good. But for the current filing, we have a debit balance. Do we settle debit balance? I am assuming that you are trying to say that earlier you were having a refund and in this period you are having a payable. If this is the query, yes, you can adjust it. By the way, automatically it will show you the ultimate payable after adjusting your previous VAT refund. I hope it is clear. Okay, who's next with us? Please unmute yourself and you can ask the query.
Can you please little more clarify regarding what previously already answered, that if a salesperson is using a mobile, it is necessary, then it can be claimed. But what about he may be using it for personal also? No? The same way we are giving vehicles on lease vehicles, we are giving to sales people, supervisors, everybody. They are using it for personal as well as for the company. Yeah. So we are not now claiming anything. We are not claiming because it is there is a personal usage also is there. But yeah. What is the treatment actually?
Yes, you cannot claim if a vehicle is available for the private use. With available, we mean if in the evening he takes the vehicle with him and over the weekend also he uses the vehicle with him, then you cannot claim the VAT on such vehicle.
Then the same thing will be applicable for the mobile also, because mostly mobile will be there with them.
I would say yes, but I would try and take the explicit blockage of input on vehicle in this case. On cell phone, I do not have any such clause. So, but on vehicle, I do have such clause available. And I must say that if you feel that it should not be claimed in terms of cell phone also, FTA will not stop you. But in vehicle, why I am emphasizing, because it is one of the three main blocked input items which FT has clarified in tax law itself. So for this purpose, it's we never claim input VAT on vehicles which are available for private use, but all other things. For example, I may be having a laptop also. I may be taking at home in the evening. So no, but I do not have any such clause for laptop or cell phone. So in this, I'll take a general guidance from the clause where FT has said you can claim input VAT on free goods which are given to the employee, which are in a normal course of the business and help the employee to perform its duty. So there's a difference between car in that sense that we are explicit, and all other items we are on judgment of the company. I hope it is clear.
Okay, thank you.
You're welcome. Okay, sir. Anything else we are having? Let me check the inbox in the meanwhile. Otherwise, please feel free to unmute yourself. Okay, so implementing states we have already answered. What else we have? We have VAT audit. I've already explained you. Documents required by FTA on visit. It is also a query. I wish I could find an answer for this, But normally, FTA has an access to all your business records. It's not only accounting records. It is on employment contract, supplier contract, rental agreement, all such things. Okay. What else we have, sir? Previous year refund has not yet been claimed. Is there any expiry date? No, we do not have any expiry date for the input VAT claim at present. What are the documents needed to claim out of scope sale transaction? You don't claim out of scope sale transaction. Probably you are trying to ask me that how you can substantiate that it is an out of scope transaction. So for example, if it is for goods, you should have full trail from where the goods started and from where the goods are being shipped. There must be a third port shipment in this case. Okay, sir. What else we have? Yes, so all my online queries are also being answered. So if you do not have any further query, then I'll take off. Otherwise, yes, Paul.
I have a question. I have a question.
Yes,
Yeah,
Paul.
just a follow up from Afif's question on the sale in Amazon. Like if the supplier is in US and his sales is below threshold, he's not registered in UAE. So who's liable to pay the VAT on that supplies?
He has to register. If you are selling to anybody who is, see how it will work, I'll explain you. Give you a practical scenario. I'm a supplier in USA. I am selling on Amazon. So it means I must be having some goods on Amazon itself, or which like those goods are already here, or the goods are coming from outside. These could be only the two situations. If the goods are already here, then in that case, I have to get VAT registration without any threshold, because for a non-resident supplier whose place of supply is here and who is supplying to someone who does not have a TRN in UAE, supplier has to get his tax registration without any threshold. Okay. Second scenario is that if he's sending the goods from outside, once the goods will be entering here in UAE, VAT will be applied there automatically. So either the shipper will be absorbing it or the buyer has to pay it, then the shipping company will be handing over the goods to him. I hope it is clear, Paul.
Yes, thank you very much. Another question on the designated zone.
Yes.
I have a machinery in designated zone.
Okay.
I have a machinery in designated zone, and it is for service purpose. I need to send it to the mainland.
Yeah.
Now the mainland supplier is charging VAT on this.
Yeah.
Is that right on the service? And
Yeah,
there's some spare parts also, which is
he has to charge you. He has to charge you. He's not concerned whether you are in the mainland or you are in a zone. For him, it is a service which is giving in UAE for some goods which are in UAE. So he'll be charging it.
Okay. Okay. Thank you.
Hi. Hi, I'm Ashma.
Yes.
Actually, I have a question. I am in the payables department.
Okay.
Sometimes most of the invoices I am receiving directly from the suppliers, but there are few invoices which our other departments in my office, they are receiving it because they need to get that invoices approved, and then it has to be submitted to finance for the payment.
Yeah.
Okay. In that case, what is happening? Supplier is sending the invoices on time to our office, but sometimes internally the invoices are misplaced or they are not submitted to finance on time, and it is coming to me maybe after 6 months or maybe late when the supplier is following up for the payment, and if we check that internally there was some leakage due to which the invoice is not submitted. So what is the right way to book that invoice? Should I put some stamp that I received this invoice on so and so date and book it, or what is the best way do you suggest for that?
You cannot put the stamp for a department to receive it. Invoice is being received by a company. Okay. So if your purchase department is giving you invoice after 2 months, it is inside the same company. Okay.
Yes.
Supplier has sent you the invoice. The only way which you can prove it is that if there was approval being done in this month or in this period, and you have a communication chain, and you can establish. Receiving invoice from department A to department B will not be a proof of invoice being received. So unless until there is a dispute, yes, your approval was not this. So your second condition, which I said earlier, first one is to claim input VAT, you need to have invoice. Second condition is that your intention has to be there, which means your approval. So unless until there is a dispute, approval being given, and it comes to you from the purchase that yes, it is being settled now, please give it. Otherwise,
by approval, you mean the manager's signature
yes,
along with the date,
yes,
right? Yeah.
yes, everything. But if you feel that it was under some drawer for last 2 months or 3 months, skipped altogether, then it was a mistake. And in that case, you need to see how you'll be able to recovering it either through a disclosure or whether it is a time barred one.
But I can book it in that particular.
In which scenario?
What is the time bar?
Time barred is that when you have received invoice and intention is also established, which means approval, either in the same period you can claim or in the subsequent period. If these two periods are over, you cannot claim it in your tax return now. Now your safest way is to file a voluntary disclosure for this purpose.
Okay. But that means up to 6 months, right? Mean this quarter or next quarter?
Yeah, I would say yes if you are filing in terms of quarter,
3
but
months.
it's not 6 months. Huh? For example, you received invoice in March. Okay, March
Okay.
was your final month of Q1. So Q1 is
Okay.
passed. Next 3 months Q2 will also pass. So in this case, it will only be 4 months. So
Okay, correct. I got you. Okay.
yeah, always understand from the tax period point of view.
Tax period. Okay. So either on the same quarter or in the next quarter. But if we
Exactly.
miss both of them, then some disclosure has to be made, right?
Yes, exactly. You are right.
Even though we got the approval late from the manager, then also.
No, approval is fine because after approval only your second condition will be applicable, that your intention to pay has been established. So
Okay.
I will give you a practical scenario to make it easy for you. For example, you get invoice in Q1 by the supplier. In Q1, your approval was not there, so you have not claimed it. In Q2,
Right.
your approval is also there by a manager, so your intention is being established. So in Q2,
Correct.
your all those two conditions are now fulfilled. So you will claim it either in Q2 or in Q3.
Okay, fine. Means from the date of intention to
Yes.
from there to quarter. Okay, perfect.
Exactly.
Okay.
Okay. Thank you very much.
Thanks.
Anybody else, sir? Otherwise, we are all done for the day. It was our first session, in this fashion, because earlier we were having trainings or some free seminars. So now we understood that it's better to answer specific queries. We'll try to come up with such sessions each month from here onward, or probably after every 2-3 weeks. So please, you will be getting the emails also. So please feel free to share it with the, anybody. The recording for this session, we'll try to make it available, and it will be available on our website also, as well as on social media. Okay, so I'll be taking leave now. Thank you very much. And okay, I have a query in my chat box, which is from Rajiv. Thanks, Paul. Laundry charges for employee is recoverable. Okay, thanks, Sagar. Normally, if it is laundry for his home clothes and all, you do not do the recovery for this. Yes, if it is a uniform or any such thing, yes, you can claim it. Thanks, Sagar. Thanks for the appreciation. I hope I was able to answer the queries for you guys. Stay safe and see you soon again.
Thank you so much.
Thank you.
Thank you very much, guys. Take care. Bye.
Thank you. Bye.
Thanks, Preet.